Well, what's happening, everybody? Welcome to Money Chat Now, brought to you by Investor Schooling. Hey, you can attend a complimentary class this Thursday by going to investorschooling.com and RSVP, and you can attend a class. I'm going to teach you stock options. I'm going to teach you real estate investing. But today, I want to talk to you a little bit more about some other cool stuff. I am your host, Larry Steinhouse, and today we're going to be discussing the Delta variant and its effect on corporations. Oh boy. We're going to also be talking about the CDC and the eviction moratorium. Hey, if you're a real estate investor like me, you want to know this. We're going to be talking about Tesla and their new policy on malls. Also, Amazon is in the news today for a number of reasons. And we have notable earnings, including ExxonMobil, Procter & Gamble, Caterpillar, and Restaurant Holdings brand. So first of all, I wanted to go talk a little bit about what's going on with the Delta variant. The Delta variant is kind of like, it's like this whole thing, this whole new thing, the whole new thing. Oh boy, oh boy, oh boy. So we know that coronavirus destroyed the economy last year, and everybody wants to get back to normal and get back to life and stop wearing masks and start having a normal life again. But this Delta variant, and I personally have my own beliefs in it, and some of you know what they are, but the reality is, look, it's really here, and people are doing things, and government overreach is starting once again. However, corporate overreach is starting. In fact, Walmart is now requiring their staff to be vaccinated. Yike. Now, look, whether you believe in a vaccine, don't believe in a vaccine, it doesn't matter. Some do, some don't. It's okay if you do, and it's okay if you don't. Not a big deal to me, but the fact that a corporation can force you to be vaccinated in order to work there really scares me. I don't know, it just scares me. But it said that basically Walmart said that its corporate staff as well as its management level employees must be vaccinated against COVID by October 4th. Now, I read into that and I go, okay, wait a minute, they got to be vaccinated by October 4th? I have a thought here. And this is my thought. My thought is if they're going to be vaccinated by October 4th, what they're really hoping for is they're really hoping for new guidance on this, and by October 4th, maybe it'll go away. So they won't have to actually enforce this. But at the same time, it's a piece of goodwill. So that may be exactly it. They're also they may be changing their return to work plans. It's kind of an interesting play, and I think that it makes sense to me and what they're doing. Now, Walmart also did something that's kind of cool. They have an incentive to get vaccinated. They have an incentive to get vaccinated. The employees in the staff and warehouse if they get the vaccine, they get $150. Again, this is just strange to me that they're paying $150 to get the vaccine. Now, in the past, they had given their employees $75, and if you are a current employee in Walmart and you got your $75, that's awesome, that's great, except here's the thing, right? You didn't get the other $75, so Walmart actually says they're going to give it to you anyway. All right, another thing is Disney is going to require masks for all guests again, vaccinated or not. I like Disney World. I'm a big fan of Disney World. I enjoy Disney World. I have a son who's like obsessed with Disney World. But I'll be honest with you, I want to go to Disney World and have a good time. I don't want to go to Disney World and wear a mask. But they feel that they have to have the guests wear masks again. So you had your little short time that you were able to enjoy Disney World, and now it's gone again. Apple stores are actually going to require masks for employees and customers very soon again. So if you walk into an Apple store, you're going to have to walk into an Apple store wearing a mask again. It's very sad. Again, look, I actually have a video out there that talks about masks, but I will also tell you most importantly is, look, masks need to stop. The whole thing needs to stop. But again, Apple stores are going to require a mask for employees and customers. And now there are some schools, although the schools near me have been fighting, the parents have been fighting the mask ordinance, and that's fantastic. I'm glad to hear that. And they won't have to wear masks in this area, I hope, for schools. Now look, if I had kids in school, I just wouldn't send my kid to school. That's just me. All right, let's talk a little bit about what else is going on. Tesla. So if you guys knew Tesla, by the way, Tesla, if you ever wanted to buy a Tesla, you would find Tesla where? You would find Tesla in a mall. So you would go to the mall and you'd go into a store there was a Tesla store. Now, Tesla stores are really, really cool. So if you had seen these stores before and you walked in and you see a car parked in a mall store, and you get to look at the car and you get to see the little options, and they have I guess they have a liaison there that talks a little bit about the car and talks about how you can order the car, and you can order the car right there from their screen or from your screen. But it was really neat that they had these Tesla stores. But Tesla is basically shuttering a number of its showrooms in high-end shopping malls, and instead will invest in less expensive locations, according to a report from Electric. Now, you need to understand that Tesla had been doing this for a long time. Now, I'm a big fan of Tesla. I'm a big fan of the cars. I'm a big fan of that model where they didn't have the actual showrooms. They actually had these stores. But Tesla understands, just like every other company, that malls are done. You know, what was left of malls before COVID is gone now. I mean, you walk into a mall now and there's nothing there. So why would Tesla want to continue to pay rent in a mall when it's going to do nothing for you? And that's basically what's happened. It's really simple. The problem with this, once again, is mall owners are going to be hurting for more to get more customers. There's a mall near me that literally went bankrupt, and I don't know if it's in receivership. I don't know what the story is. I don't know if there's any stores in there paying rent to anybody anymore. But when I go in there, it's more than 50% empty, and it actually went bankrupt. It was one of the Simon malls, and it went bankrupt. Simon couldn't pay the interest, so they're done. And that's what's going on with malls. I want to talk a little bit about Amazon, but before I do that, I'm going to go out to a commercial, and we will see you in just a minute or two. How's that sound like fun? Does that sound like fun going to a commercial? Let's do it.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. Investor Schooling.
Steinhouse, and we've been sitting here talking about some cool stuff, such as Apple, such as the COVID variant, the COVID Delta variant, that is. We've been talking about Tesla and malls, and now I'm going to talk a little bit about Amazon. So yesterday, if you remember, Amazon disappointed investors with earnings report and guidance. Now, this is kind of strange because you have to understand that, of course, Amazon did what they did. They had a great year because of COVID, and nobody could go shopping. Everyone went to Amazon, and they bought all their stuff on Amazon. So Amazon's guidance was, hey, listen, you know, stores are opening up now. Somebody might actually buy somewhere else besides us. Who cares? You know, frankly, Amazon is an incredible business model. It's taken over the world. It'll always take over the world. Shopping will never be the same. And frankly, I got to be honest, I mean, you know, when we come to Investor Schooling, it's funny, our company, Investor Schooling, there's packages from Amazon every single day. I don't even want to go shopping anymore. So I believe that this is a mistake, that people are running from Amazon as investors. But the other interesting part is that several analysts agree with me, and they have raised their expectations on Amazon and say, hey, it's going to be a great play. The nice thing is that today, or I guess it's not so nice, but today they were down, I don't know, like 7 or 8% they were down for a while, and they had their worst day since March 12th. I'm going to tell you that I believe Amazon is a buy. If you're a buyer of Amazon stock, you'll be very, very happy. Not in the very short-term future as well, you'll be very, very happy. Now, for you guys who know me, I like to play stock options, and Amazon's just too expensive for me for a stock option. But as a stock, I think it's a great stock. It's got a great dividend. You'll be doing fine. And they're also saying, and just so you know, just to back up, they were also saying that they had slowing growth, but that's ridiculous. That's not going to happen. All right, The other thing that Amazon happened, which was kind of bizarre, was Amazon drivers around the U.S. say that managers routinely ask them to bypass daily inspections and not report certain types of problems with their vans. So now they're driving around with vans with problems. This could be really hairy. So they say that doing so violates Amazon's policies, which urge drivers not to operate any unsafe vehicle when they're on the road delivering packages. I want to bring something up here. I noticed that one day a Amazon driver knocked on my door, grabbed my stuff, and I watched her go out to her car. Yes, her car, not her van, not her Amazon van, her beat up hoopty that she drives every single day, and this is what she was delivering packages in. I think this is a major mistake. I think it's a mistake in so many different ways for Amazon to allow their drivers to drive their regular car. This is going to become a major problem in the future, and if the vans are problems and people are driving their own cars, ooh, you just wait. I'm just waiting for the lawsuit where someone gets into a car accident, just some whatever, $15, $20 an hour worker driving their car, delivers packages, gets into a car accident, and the person who they got into a car accident with finds out that they were employed by Amazon and doing Amazon work at that time. Amazon's going to be sued for that, and it's not going to be pretty. And if the driver is drunk, it's even going to be worse. Do I think that can happen? Yeah, I would bet that there are drunk drivers driving vans all the time. Now, not all the time, but it's going to happen. But if they're in their own car, it's even going to be worse for Amazon. So I don't get it. I don't understand it. It shouldn't happen. Anyway, whatever. So they also, by the way, they were also saying that the reason they were doing this is because there's just so many packages, so much demand. All right, I want to talk about something else that's very important to me and other real estate investors, which is the eviction moratorium. So there was the CDC, with the CDC got authority to create an eviction moratorium. I don't understand. The CDC is just a guidance. They can tell the president, they can say the president or the House or the Congress, they can say, listen, we think there's going to be a problem here, but who is the CDC to decide that there should be an eviction moratorium? Well, it was overturned. And the eviction moratorium was actually supposed to end tomorrow, which would be the 31st. And the Biden administration had a choice whether to move to extend it. And they chose not to. And I'm very happy to hear this, that they chose not to. Now, I'm not saying that if you're poor and couldn't afford your rent, this is a good thing for you. It's not a good thing for you, but it's a good thing for the people who took advantage of it. Now, there's another thing that's interesting about this is that people while the eviction moratorium was going on, there was all of these funds available for both landlords and tenants to take advantage of, and there was not enough public knowledge, and they did not take advantage of it, and that's part of the problem. So only $3 billion of the aid authorized by Congress in December and March had been delivered to landlords and tenants as of June 30th. The Treasury Department says that there's about 8.2 million adults are behind in their rent or mortgage as of July 5th, and they have low confidence that they can pay the rent on time or their mortgage on time coming up. Two problems. One is we have the eviction moratorium, and the other one is we had the delay. And you were allowed to defer your payments on your mortgage, and all this is going to come to a head. If you're a landlord and you own properties and you weren't getting paid, well, you also had the choice of not paying your mortgage at the time, so that was helpful, but all that's coming to an end. Now, as a real estate investor, I'm going to look for some opportunities. If you're a real estate investor, you could look for some opportunities. If you're a landlord, you can see that maybe you'll get some relief if you were able to hold out that long. And if you're a tenant, look, if you really had a problem, talk to your tenant. If you didn't have a problem, well, you're no longer being allowed to take advantage of the situation. So as of tomorrow, you can evict your tenants again. I would also bet that on Monday, the courts are going to be full. Going to be really full. All right, it's time to talk a little bit about some notable earnings. And I'm going to talk about the first one. And the first one is ExxonMobil, XOM, ExxonMobil. Now, ExxonMobil, as we all know, all the gas and all the travel stocks, and this is considered a travel stock, were beat up a year ago from COVID. The oil stocks came back, and they came back roaring. Now, of course, when Biden came in, he shut down he shut down the fact that the money was moving into the United States and we would become self-sufficient. And look, I don't know, whatever the reason was that he decided that we should no longer make oil in the United States. I don't get it, but it doesn't really matter. But that makes oil prices go up, and it makes gas prices go up. So if you've seen your gas prices at the pump, that reason go up at the pump, that's the reason for it. However, companies like ExxonMobil are going to benefit from this, and sure enough, they did. ExxonMobil, with the expected earnings was 0.992, and their actual was $1.10 per share. That's a pretty good difference. Pretty good difference. Now, Exxon was up today, and they did very well. And there's been also some upgrades to Exxon, from people who they upgraded Exxon from buy to hold, and they said that all gas companies are a good buy right now. I'm okay with gas companies being a buy right now. I don't think they're super strong anymore. I think they were really strong 6 or 8 months ago, and now they're okay. They'll probably bounce back into a nice range. You can see they're still down from last year, but it's not that much. And I think it's time to move on. And we talked about this before. We'll talk about the travel industry in a little while. So let's talk about Procter & Gamble. So Procter & Gamble, their earnings was expected $1.08 per share. Their earnings were $1.13 per share. And sure enough, the stock rocked. They did pretty well. It was a pretty good play today for Procter & Gamble. And let's just see what they closed at. I'm curious. So Procter & Gamble went up about almost $3 today, and they did very well. They're going to continue to do well. It's a good company. Now remember, what they're doing, what they do, and all the goods, home goods is going to be a great play for them as well. All right, next, let's talk about Caterpillar. Now Caterpillar has always been a kind of a standard on where the world's going. So I've noticed this before. When Caterpillar's earnings are good, the economy seems to do very well after Caterpillar's earnings. So this is a good sign. This means the economy is going to still continue on. As far as I'm concerned, it's going to still continue on and continue on very well. Because look, if Caterpillar is selling tractors, that means things are being built. Now don't forget that right now we have the bipartisan bill in Congress over the infrastructure. So that probably affected it and helped it as well today. So that may be something good. So let's do this. We're going to head out to a commercial real quick, and we're going to get back with some more notable earnings.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from 2 Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
All right, welcome back. Welcome back to Money Chat Now. I'm your host, Larry Steinhouse. We've been talking about some interesting things today. We've been talking about Tesla in the malls. We've been talking about Amazon. We've been talking about Walmart, and we've been talking about the COVID Delta variant. And now we're going to talk a little bit about Pinterest and what happened in Pinterest yesterday. So we talked about Pinterest earnings yesterday. They didn't do so well. Most importantly, Pinterest stock was hammered about 20% after the image sharing website operator reported a quarterly decline in monthly average users. So basically they're saying not that many people are going to Pinterest anymore. I don't know if that's true. I don't know if it matters. I mean, obviously it's true. They reported it. I don't know if it really matters for Pinterest. I don't think that means that Pinterest should go down 20%. I actually think it might become a good buy. Just watch it for the next couple of days and see where it goes. It might become a good buy. But the reason for this, and think about this, right now people are getting out. They're not sitting in front of their computer. They're not shopping for shoes and clothes and everything else that whatever that that they usually shop for on Pinterest, right? So that's probably why Pinterest is not doing as well. Now, if we go over to Facebook, and I want to talk about Facebook because Facebook and Pinterest seem to have had the same issue, where Facebook is saying that, hey, they really can't get that many more users. There's only a finite amount of people on the planet, and only a finite amount of people have access to Facebook, and Facebook is saying, hey, we just don't have that many users anymore, or we can't get any more users. Now, I think there's a little bit more to the story of Facebook. Facebook not only has the user problem, they also have the Apple problem, where when Apple changed their policies, that made it more difficult for Facebook to run their algorithm for ads. That's part of the problem, and I'm going to see that. We're going to see that coming in the future. I'd like to see Facebook drop into the 240s or 235s, and then I think it's a really good play if we could get below 240s. And if we get in the 235 range, I'm going to say that's a great play for options. All right, real quick, I want to go through real quick. The Dow closed today down 149. The S&P closed down 23 points, almost 24 points, and the NASDAQ closed down 105 points today. So that would be that. Next week, I want to talk about the fact that we're going to be discussing some more notable earnings. We're going to be talking about trends in the stock market and all the news relative to making more money. I want to thank you all for watching Money Chat Now. We are brought to you by Investor Schooling, and you can go to investorschooling.com and take a free class this Thursday and learn more about the stock market and real estate. I want to again thank you for watching, and I want to mention real quick that from time to time I own some of the assets and options discussed in this show. The opinions discussed in this show are solely mine, and no one has asked me to discuss them. Thank you for watching Money Chat Now. We look forward to your continued support, and please, 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 please like and share our show, and we'll see you on Monday.